Last week, the global economy was jolted by a major escalation in the US-China trade dispute. On October 10, 2025, President Trump announced a sweeping 100% tariff on all Chinese exports to the US, responding to China's new restrictions on rare earth mineral exports. These minerals are vital for everything from smartphones to military tech. The tariffs, set to begin November 1st, sent shockwaves through markets and political circles. Trump also unveiled new export controls on critical software, tightening the screws on Beijing. The administration claims these moves counter unfair trade practices and protect U.S. national security. The scale of the tariffs is unprecedented, threatening global supply chains built over decades. With the APEC summit in South Korea just weeks away, many see this as a high-stakes negotiation tactic to pressure China into concessions. The strategy is classic Trump: maximum pressure, high volatility, and global uncertainty. U.S. companies relying on Chinese manufacturing now face a crisis, absorb costs, pass them to consumers, or scramble for alternatives. The world is bracing for a new phase in the U.S.-China rivalry. The stakes for businesses and consumers on both sides of the Pacific have never been higher. The uncertainty is palpable. Beijing's response to Washington's tariff threat has been notably restrained. Chinese officials called the U.S. move hypocritical but clarified their rare earth controls are not a total ban, just tighter management of a strategic resource. This was meant to calm fears and frame China's actions as reasonable, not hostile. Crucially, China has not announced new retaliatory tariffs, breaking from the tit-for-tat pattern of past trade wars. Some analysts see this as a strategic pause, China positioning itself as the more reasonable party and avoiding further damage to its own economy. Official statements defend China's right to control its resources, but keep the door open for dialogue. The approach is firm but careful: show strength, avoid escalation, and preserve room for negotiation. With the APEC summit looming, China's leaders may believe a calm response strengthens their hand in any talks with Trump. By not escalating, they signal a preference for negotiation over confrontation. It's a calculated risk. Restraint could be seen as weakness, but it also opens a window for diplomacy. The world is watching to see if this measured response brings the U.S. back to the table. For now, China is betting on patience and strategy over immediate retaliation. The next move is up to Washington. The tariff news triggered instant volatility in Asian markets on Monday, October 13th. Chinese stocks plunged, Shanghai Composite dropped 2.5% at the open, and the CSI 300 followed suit. Panic was short-lived though. A reassuring Trump social media post hinted the tariffs might be a negotiating ploy. Markets rebounded. Shanghai closed down just 0.2%. CSI 300 lost only 0.5%. Hong Kong's Hang Seng Index fell as much as 3.5% before recovering, while tech stocks and the volatility index spiked. Investors are now more accustomed to the cycle of threats and negotiations. The initial panic gave way to cautious optimism that diplomacy could prevail. The market's resilience shows traders are learning to navigate the new normal of US-China brinkmanship. Still, nerves remain raw as the next moves are awaited. Beneath the market turmoil, some sectors soared while others suffered. Rare earth companies surged, up 6%, as investors bet on higher prices and government support. China's semiconductor stocks also gained, reflecting hopes for accelerated tech self-reliance amid U.S. export controls. Sectors like AI, robotics, and biotech are now seen as future winners in China's push for independence. Meanwhile, Chinese exporters reliant on the U.S. market were hammered, facing the threat of losing their biggest customers overnight. The trade war is speeding up China's shift from export-led growth to domestic innovation. Analysts expect government policy and investment to keep favoring strategic tech sectors. The market is splitting, those vulnerable to U.S. pressure and those poised to benefit from China's response. The winners and losers are being decided in real time. Many experts see Trump's tariff threat as a negotiation tactic ahead of the APEC summit. Some investors view the market dip as a buying opportunity, betting on China's economic resilience and government support. The key watch for signals from Washington and Beijing, especially any confirmation of Trump-Xi talks at APEC. A meeting could signal de-escalation, More threats or canceled talks would mean more turmoil. The outcome matters for everyone. Prolonged conflict could disrupt global supply chains and raise prices worldwide. For now, all eyes are on diplomatic moves, China's economic policy responses, and the final US tariff decision on November 1st. The next few weeks will determine if we're heading for resolution or deeper confrontation. The world waits, watching for the next move in this high-stakes game.